Hi guys, it's Gemma from Proper Porco, and I'm so happy today to have Jeff Weiner here with me from HKM Associates. Jeff is a prolific networker. I met him through the Provisors Network. He also has his own networking group called Round Table Networking Group. But for the last over 40 years, Jeff has been leading HKM Associates, which does benefits, and he's going to talk a lot more about that. And I had some specific questions about that for hospitality. One other thing about Jeff is that he's a New Yorker, which you will hear when he starts talking, and we are both alumni of SUNY school system in New York. So talking to you feels like home, Jeff, but welcome.
Thank you very much. Appreciate it.
So tell us a little bit about HKM and what you do, and then I'll dive into some questions for my clients.
Sure. So HKM Associates is my own firm. Tomorrow, I actually start my 45th year in business,
Wow.
licensed in 42 states, so we do business all over the country. And we do benefits, but we're much different than the thousand other brokers out there. So what do? We sit down with a company, we take a look at their bill and benefits. We shop the market to see if there's something better, less expensive. If it's a different carrier, we get a list of the doctors and the employees' doctors, and we do doctor searches. So this way, nobody has to switch doctors, even if they're switching carriers. We also run employee meetings for all our groups. And when I run the employee meetings, we tell the employees to pull out their cell phones and put my cell phone number on their speed dial. So we're available 24/7, not only to the owners of the company, but every employee of every one of my clients has my cell. So we service differently. We take care of adding people on, taking people off, getting them their ID cards. But we deal with all the claims and the billing and the service and the grunt work.
Working with hospitality, I know they like texting, so it's nice to have an option aside from email or some sort of web portal that you have to figure out.
There's no 800 number with us. You call me on my cell, you email me. I'm obsessive about checking my emails and answering phone calls quickly. So, we're available 7 a.m. to 12 a.m. 7 days a week. We deal with a lot of California companies. So we know 7 o'clock their time is 10 o'clock our time. We're answering the phone.
So the benefits that you're talking about are the day-to-day benefits, but you also, which is part of why I wanted to talk to you, can help people set up their like succession planning or make sure that their ownership makes sense for worst case scenarios. So could you talk a little bit about how companies could be better set up for, you know?
Sure. So we do the traditional benefits, medical, dental, disability, long-term care, life insurance. But with businesses, when you own a business, especially if you have a partner, one of the first things you need to set up is called a buy-sell agreement. Basically, it's protection for you, but more importantly, protection for your partner. Because what happens is when two business owners own a business, and it's worth $1 million, okay? And they're 50-50 owners. If something happens to one of the owners, the surviving spouse on that owner is going to say, okay, the business was worth $1 million, give me $500,000. Well, where are you coming up with $500,000 from current cash flow? So what you set up is something called a buy-sell agreement, which the business owns. The business is the beneficiary. You speak to an attorney. You have an agreement which lays out what happens. Now, if you have a buy-sell and it's funded with life insurance, now something happens to your partner. You get the $500,000. Surviving partners, their surviving spouse says, okay, here's my half of the business. Everything is clean. Everything's easy. You walk away with 100% of the business because you don't want to be your partner's wife's partner.
I can't tell you how many times in doing ABC applications when we get spouses qualified that people say, why does my wife have to get qualified? She's not involved in the business. But I think I've done 3 or 4 transfers now where one of the signatories was deceased. And so I've seen all kinds of kind of crazy things trying to manage in an already challenging situation, and you need a wife to sign off who doesn't really want to be involved in the business. So do you have any good horror stories that might scare people straight? on
Y-
this?
Yeah, I had one that happened to me 6 months ago. I got a call from a guy. We did a buy-sell agreement for him. We did the life insurance. He actually never did the agreement. And I said, and unfortunately, he called me and he said, Jeff, look, I'm really sick. Well, I don't have long. And do you have a copy of the agreement? And I was like, no, you never sent it to me. I kept saying, make sure you have this agreement, make sure it's written. He said, yeah, because I'm concerned that my partner is going to screw my wife out of this money. And I'm sure it will be in litigation for years
Yeah.
because it was multiple. He had $3 million of coverage with me. So the business was worth at least $6 million. I'm sure to get that $3 million, it's going to be years of fighting in court.
Not what you want to be doing, especially
No,
after,
you lost your spouse. It's bad
yeah.
enough. Now you got to lose your spouse, and the $3 million you're supposed to get, you're not getting so fast, or at all, or you got to take a legal action. Yeah, not a way you want to be.
This is like the ounce of prevention is worth a pound of cure type thing. How much should business owners be spending on these kind of services?
Well, a basic buy-sell agreement, I don't think is expensive. There's plenty of attorneys that do estate planning. Don't go to your real estate attorney who writes up an agreement. Go to a business attorney who deals with this all the time and have an agreement because the agreement will clearly lay out what happens if something happens to one of the partners. And then you fund it with life insurance. You put it into the agreement, and it's simple and it's clear and it's easy and just way less hassles.
I can also add that once a change happens in your business, make sure that you update the Secretary of State and the corporate documents and any of the licensing you have. I have a current client who separated from his business partner in 2003, but never updated ABC. So can get a
Well,
little,
yeah, we have situations on life insurance where the ex-wife is still the beneficiary, and then the guy passes away, and the new wife is not too happy that she's not getting the money that she was expecting because he never updated the beneficiary.
yep, stay organized, people. How can people vet a good company or provider? What are some things to look for?
Well, as far as insurance goes, you want to work with an independent broker. You don't want to work with a Guardian, Northwestern, New York Life person who works for only those companies, going to only sell those products because they're going to give you their best product, but they're not going to give you the best product.
Um,
We're an independent broker. We represent every carrier out there. So we shop by age, health, and who gives us the best rates. Because
yeah.
typically with a buy sell, you're going to use term insurance because you don't need cash value, you don't need retirement. You're looking to protect the business value of the business, and you want to do it at the lowest cost.
Before I ask you my last question, which is a little switching gears, is there anything else that you want to share with hospitality businesses that they should be thinking about?
One of the things on benefits that you need to be thinking about is something called controlling interest. Many restaurant people own multiple restaurants. Well, if you own majority share, and that varies from state, sometimes it's 50, sometimes it's 80%. But when you own majority share in a business, okay, you have to add those businesses together to what's called the full-time equivalency. You could have 100 part-timers. We had a guy that bought some franchises, and he said, one of the franchises I bought has benefits. What do I have to do? I don't offer benefits. And I was like, all right, well, what's your situation? Well, I own 7 franchises. I own majority share in all of them. I have probably close to 200 employees, but only 12 full time. Well, the 200 employees is equivalent to 100 full time equivalent. Now, you don't have to give it to your part time people, but you do have to offer benefits to those 12 because he'd be looking at a $200,000 per person. So with 200 employees, a $400,000 non-tax deductible penalty for not offering benefits. Now, there's ways of working out benefits where you're going to offer it, but nobody's going to really want to buy it. but you have to be really careful because if the IRS walks in, they're going to say, oh, you own 80% of these five? Yeah, well, you have 300 employees, give us $600,000 and you're done. And there's no argument because you have you have to offer it a certain way. You have to do it in multiple languages. There's lots of requirements, but you got to be aware of it because it's a huge hole in the hospitality industry because they say, oh, I don't know, I own majority. They're all part-timers. Who cares?
Is that something you can help people figure out?
Yes.
Okay.
Yeah, we work with those situations and we figure out, do you really have to offer benefits and how do you offer them without offering them, but qualify from a compliance point of view?
Yeah. Yeah, I'm very much on the business owner side of things, so that's usually the lens I look through, but I think it is really helpful to see the big picture here and just protecting everybody. Is that what you were talking about in terms of compliance, or is there anything else with compliance?
Yeah, no, it's just really being aware of what you have and what you have to offer and what you don't have to offer.
Yeah,
There's certain rules with employees with offering them qualified pension plans now. Over a certain amount of employees, you got to offer benefits. Now there are state plans or different plans, but yeah, you got to just be aware of compliance and things that are changing that
yeah,
affect your business. And you can't say, oh, well, we've been doing it the same way for 20 years, so we don't have to do that. Yeah, you do. When the
yeah.
changes go through, the state doesn't fool around, especially with California and New York and some of these states. They follow the rules and you got to be aware of them.
I see that a lot with their alcohol licenses as well, that there's not great communication between the agency and the businesses that they regulate. And so to learn some of these things, you really do need someone like me to help, which I guess is job security, but it's tough for people to stay compliant in these high compliance states.
Yeah, these things are changing all the time.
Yeah.
I talk to employment attorneys all the time, and by the time they write to something, it's already outdated and they got to do something different. Especially
Um,
with the Department of Labor coming in and
yeah.
the state coming in. You got to be careful to try to avoid that as best you can.
Having a good partner is invaluable in that. Okay, switching gears a little, my last question. I was curious to hear what your definition of hospitality is, and if you could share some of your favorite hospitality businesses, restaurants, tell us a little bit about what you like.
Sure. We work with restaurants and catering halls, and we don't really have any hotels as clients, but we do work with a lot of restaurants. We do work with a lot of hospitality. And it's really, again, about the education. We have this one in Massachusetts. They came to us, they were like, well, we have 200 employees. And we have this plan that, and there's only 30 or 40 full timers, so it was fine. And they said, well, we have this plan and it's a 40/80 copay and a $3,000 deductible with the UHC. And we like the plan and we like the carrier and we're getting a 10% increase. I don't think there's really much you can do because we're not switching. A lot of the guys don't speak English and things like that. And I was like, yeah, that's fine. Send me your information. So he sends me the information. I said to him, so why don't you have a $5,000 deductible? He goes, Jeff, these guys can't afford the extra $2,000. Great. Not what I'm saying. You go from a $3,000 deductible to a $5,000 deductible, you'll save $120,000 in premium. Set up what's called an HRA, pay as you go health insurance, and you fund the 2 grand when and if needed. And even if all 40 guys all hit the max all at the same time, well, you're still saving $40,000 instead of a 10% increase. But more importantly, you go to your guys now and say, hey, guys, good news. Same carrier, same plan. Yeah, the deductible's $2,000 higher, but we're a good boss and we're going to cover that $2,000 for you. And by the way, for the first time ever, you're not getting a rate increase. And then I said to him, okay, great. So he made us the brokers. And I said, all right, I want to do an open enrollment meeting. And he said, we've never had one. And I was like, what do you mean you've never had one? And he said, Jeff, I told you a lot of the guys don't speak English. Well, we have a company that we work with through Provisors that provides us with interpreters. And we did 4 open enrollment meetings in 4 different languages.
Just wouldn't think to do that as a business owner with the thousands of other things you're thinking about.
Yeah, because he just looked at it as it ain't broke, don't fix it. My 10% increase in cost of doing business we find the holes that that brokers don't look for, because it's more work and it's less commission. So brokers don't think that way. We think about it long term because that's the way we work, and we're doing it 45 years. Oh no. So
You can see around the corner in a way that most people can't. I loved your answer to that, but I was trying to ask you a fun question. What's your favorite restaurant for you to go eat at?
oh, okay. So there's this little hole in the wall restaurant. What happened was we went to a restaurant. We went to a concert hall and we thought they were serving food and they weren't. So across the street, there's this little bar restaurant, and we're like, you know what? All right, fine. Let's just go in there. They had the best steaks. And it's this
I
little
love
hole in the wall place that we've probably passed a million times and said, yeah, we would never go there. And now it's like our favorite restaurant. And we know the owner and the family, and we're like regulars there. We go there all the time. And so we tell people, you know what? Try it. You never know. And we discovered this hidden gem in the local town. And we've told lots of friends about it. And now in fact, we're doing a charity fundraiser in a couple of weeks where we're bringing in chefs and restaurants. And he's gotten all his chef buddies, and they're all coming and they're cooking live for us. And we have restaurants, and we're going to raise money for a charity.
What's it called?
The charity event is called the Red, White, and Blue event. It's for American Cancer, but normally we don't support big charities, but this one, 80% of the money is going to research. So we like that. And it's $75 a ticket, $750 for sponsorships. And we're going to have about 150 business owners there. And we're going to raise probably $15,000 for this charity.
Awesome. Thank you so much for spending time with me today and answering some questions about benefits and buy sells. And I hope that you have a great rest of your day.
Thank you. You too.
Thanks, Jeff.
Now, did
Awesome.
you want to talk about the rest?